Andy, thanks for coming in this morning and talking to us about alternative investments or assets. In particular, I think a lot of New Zealanders don't actually know what that means. So today your job is to hopefully explain this to our viewers.
Great.
Probably what we do need to explain as well is the background, which is a picture of an awesome concert. You might wonder why we chose that. Both Andy and I are particularly passionate about music, and we thought this would be an awesome backdrop to start the conversation.
Good choice.
Okay, so alternative assets, what are they? Can you give us some examples of what that means from an investment perspective?
Well, alternative assets are anything which is not your more traditional assets, and traditional assets are equities, fixed income, property, and also money in the bank, which a lot of New Zealanders have exposure to those four asset classes. Alternatives are really anything but that. So private equity, which is investing in private companies, hedge funds, which are fund managers who are more active than more passive fund managers, investing in commodities like cocoa, water, investing in agricultural assets like farms, timber, and even investing in art.
Okay, so the things that traditionally people don't normally have direct access to, they need to go to a specialist for this.
Yes, definitely a specialist, that's right.
So how do they work in an investment portfolio? Because why are they important, or how do they impact a client's investment portfolio?
Well, as probably most people know, you need diversification in your portfolio. So having some equities and some fixed income and some property is fantastic, but it's not necessarily a diversified enough portfolio to weather the storms, the upside and the downsides that the world and the markets give us. So by having alternatives alongside those asset classes, like equities and bonds, diversifies the risk, but also lowers the risk of the portfolio, and over time produces a better return for investors.
And so we're saying that they're to be added or included in a portfolio,
Yes.
not something that you'd invest in directly only. It's like you say, part of the diversification.
Yes, it's part of the diversification. If you look at Australia, 16% of their $2 trillion of funds under management is in alternatives. Whereas in New Zealand, we've only got a 2% allocation in KiwiSaver to alternatives. So it's quite compelling overseas. It's taken off a big time overseas, but New Zealand's been very comfortable sitting in its traditional asset space. And I think now that equities and fixed income and property are expensive, there's no easy money to be made. People are going to have to look to add these alternative assets, which just reduces the overall risk of the portfolio.
Right. And talking about risk, I mean, you were saying that as a component of a diversified portfolio or people's investment choices, that they add to it. But what are some of the risks associated with alternative investments?
Well, if you look at equities and fixed income, again, which most people are in New Zealand, they're reasonably liquid. You can move in and out of them quite quickly. Alternatives tend to be less liquid. So investing in a company privately, investing in a farm, investing in hedge funds, the liquidity varies between different assets within alternatives. So liquidity is not necessarily as good. But on the other side, it does improve returns to the portfolio and reduces your overall risk.
So what I'm hearing is that they, as an asset class, are for your longer term investor, so that they're not going to be in and out of the market. It's a component, obviously, where KiwiSaver's involved.
Yes.
It's a long-term savings product, so probably an element of alternative assets would complement it, but you need to make sure you wouldn't want to get your money out quickly out of these particular assets.
No, that's exactly right. I mean, all investing should be for the medium to long term anyway. I mean, even if you look at the US or globally, global pension funds have 25% of their money invested in alternatives. So they're taking a long-term view like the NZ Super in New Zealand or the Future Fund in Australia. Long-term view, large allocations, around 20 to 30%, and you are not looking to take your money out quickly.
Andy, that's great. Thanks so much for giving us a bit of an insight on how they work. I trust that the viewers got some more, I guess, information that will help them make better investment decisions, and it's all about diversification. So thanks for your time.
Pleasure.
And,
thank you.
I look forward to seeing you at your next concert.
Okay, good one.